Welcome to Stock Talk. This is your host, Scott. Hope you had a good week in the market. It was a crazy, crazy week. Saw some things I hadn't seen in forever, and I've been doing this since 1999. So we're going to talk about what was going on there with some of that with GameStop, and the AMC. I actually got caught up in it a little bit myself, broke some rules of my own, and I'll talk about that. We're going to be upfront with you about that. So sometimes you've got to learn lessons, and you know better, and you do things that you shouldn't do. So we're going to talk about that a little bit. But let's go ahead and jump over and talk about our portfolio. See where we closed up the week on Friday, and so let's do that now. All right. So here's our portfolio. As you can see, you're going to see some new ones on here. We're going to talk about these two. The first one that you're going to see there that's new, you'll see that UVXY. And UVXY, that is a ProShares Ultra VIX short term futures, okay, ETF. So I don't know if you've ever heard of the VIX. We're going to talk about that right now as well. The VIX is a volatility index, and that volatility index kind of measures what's going on in the market as far as the ups and downs type thing. So I'm going to pull that up, and we're going to talk about that specifically here. So is volatility high or low? Simply put, volatility is the range of price change security experiences over a given period of time. If the price stays relatively stable, the security has low volatility. As you can see here, a high volatility security hits new highs and lows quickly, moves erratically, and has rapid increase and dramatic falls. What we've seen over the last few months, if we had a very low VIX, you'll hear them talking about that VIX index. We've had low volatility, but with what's been going on this week, that volatility has gone up quite a bit. So, and I don't see that changing anytime soon. So that's why I bought this ETF. Again, let's go back to it. The CBOE Volatility Index, or VIX, is a real-time market index representing the market's expectations for volatility over the coming 30 days. Investors use this VIX to measure the level of risk, the level of fear, and stress in the market when making investment decisions. They also use this as a insurance type policy against your portfolio. People will buy the VIX security type things like this ETF, so they can kind of have a buffer when things get crazy. If it gets crazy and that VIX is going up, then they'll be making some money on that. That's why we did that this week. So we're going to talk about that just a little bit more here. All right. So can you buy the volatility index? Can you buy the VIX? The VIX is not something that you can buy directly. Okay. Moreover, unlike a stock index such as the S&P 500, you can't even buy a basket for underlying the components to mimic the VIX. Instead, the only way investors can access the VIX is through futures contracts. Okay, through futures contracts. So what this ProShare Ultra VIX short-term futures ETF is, you see it here. It is the investment seeks daily investment results before fees and expenses that correspond to 1.5 times. That's you'll hear the term leveraged. So this is a leveraged ETF. It goes 1.5 times the performance of the S&P 500 VIX short-term futures index. So for a single day. So we bought that. It's going to mimic the VIX 1.5 times. So that's why we bought it. It's going to be a little crazy probably the next week or so. It might even be longer than that. So if that VIX keeps going up, this is going to be making us some money. So that's why we did that. And you'll see that on our portfolio now is this one here. And you can see that it was up 8%. It was up 8% Friday. We did buy in on that one at 14.13, so we're up a little bit on it, not the whole 8%. All right, so I want to show you that. I want to show you the charts on this one. All right, let's take a look at this 5-day chart. Of course, you know the GameStop and the AMC and the BlackBerry and all those stocks that have been going crazy lately. That has caused this VIX to go up. As you can see here, it really started on Wednesday. It's been going up a little bit Thursday and some more on Friday. So it's got a good upward trend there. Just want to show you a 1-year chart on that. This VIX shot up to 91.11 back in March when this COVID stuff hit. You see that there? That's pretty high. After it's come down, I mean, it's been down. As you know, it got down to here, 27, got back up to 40, and we're on a downward trend, but we got a couple little bumps here. Nothing like what we've seen, but I wouldn't be surprised if we don't get back up in this range at some point, or somewhere in, like up in the 25 area range. So, and the volume's heavy on this thing. Look at the volume, 162, normally 56. Again, this is not something you want to hold all the time necessarily, but if you think the market's going to be going up in volatility, then this is the tool that you can use to try to make money on that. And that's what we're doing. Okay. So let's take a look at some more of our portfolio here. AMC, now that's one of the stocks that's been trading like crazy. Let me pull that chart up. What's happening there is you've got the regular Joes like me and you. They've gotten on a social media site and they've kind of coordinated an attack on several stocks that were shorted to a very high degree. AMC being one of them, and the one that's really shot up is that GameStop. That was shorted well over 100% by these hedge funds, the big boys. I like to refer to the big boys a lot of times, and the big boys are these hedge funds. So they had this thing shorted and had it driven down to like $4 or $5 a share on that stock, and it got up to like they did what's called a short squeeze on them. They coordinated buying those shares, which made the price go up and up and up, and it got the hedge funds in a mess. And of course, now it's just been a mess this week. Robinhood has limited some of the tradings. TD Ameritrade's limited some of the tradings. Some of them's limited option trading. Some of them's limited trading at all on these stocks, or even buying them versus selling them. It's just been a mess. It's not been a free market. Okay, so that's a new lesson for me. I didn't know that the brokerage firms would be in on any kind of thing like this, but there's something going on there. It's going to be all kinds of mess going on with it for a while. Of course, the government's going to get involved and regulate things, possibly. So you'll see some volatility in this market. I feel like we're going to see some volatility. Now let's talk about AMC. That's one of the ones the other day went better against my better judgment. Some of the things that I say not to do is chase a hot stock. I did that. Okay. Don't get greedy. I did that. Was another one that I broke. I know there's another one. I can't think of it right now, but there's a couple of rules of my own that I broke. And when you do that, have patience. And I didn't have enough. So when you break your rules like that, you're going to pay for it. And so we paid for some of that this week. The reason I did that, though, I'll tell you, we were having a really good week. So I thought I'd take a chance on it. And it wasn't a bad move. I bought it in after hours at $14.50. That was on the 27th. I woke up 28 pre-market, and that thing was up $20. But Scott didn't sell. Okay, so that's a bad move. That's what you call greedy. I had several stocks that were up in the green that I probably could have unloaded and just been done with them. We'll talk about that as well. But we got a little greedy, and we ended up paying for it because all those stocks pulled back. Once these brokerage firms came out and started limiting trading, things like that, it was downhill from there. Now, what happened? I did sell that out. I bought it at $14.50. I sold out at $10, so we had a good little loss there. But I could have held it. That's where my patience didn't come in. I could have held it, and because what happened after hours, it went back up, and the next morning it was back up again. I could have unloaded it probably above 14 somewhere, and made a little bit of money, or at least could have got even on it. But I didn't. We just cut our losses on that. We didn't want to mess with it anymore. So that's good. That's the only good move I made on that one, was just getting out of it, because it's very volatile. I mean, you're really gonna have to be timing just has to be perfect on these things, and I don't trust with what's going on now. Now this thing may run back up to $20. Who knows? In this GameStop, it took off again Friday as well, and you could have made some good money on that if you timed those just right. But those are dangerous plays. That's not a good way to do stocks. But sometimes you do make moves that you shouldn't make. But we had plenty of room to do that this week. So it's because we was having such a good week. We still end up with a good week, so I'm not too tore up about it. But I like to kick myself when I make mistakes that I know better. Okay, but you'll do that. I mean, you'll do that from time to time. And what you've got to do is regroup, refocus, and then just focus on what you've been doing that's been working, and don't try to do things out of your comfort zone, out of your bailiwick, out of your status. So that's the lesson we need to stick to. Okay, but I didn't, so I'm taking it right there. My buddy did get back. He had some, and he traded his, and actually did pretty good on it. I think he's traded it several times. So all right, so let's take a look at some others. Cliff, and U.S. Steel. Now U.S. Steel had earnings, and they were up a little bit Friday after earnings of U.S. Steel. You can see Cliff was up a little bit here at the very beginning. U.S. Steel was up, had a pretty good little pop there, but it sold off at the end of the day for Friday. So we didn't make any money on those, but those are pretty good holds, I think. I don't think they're going to be going down real terrible or anything like that. But the earnings were halfway decent, so I'm not going to worry about that one. SH, that's our pro share short S&P, so that's the one that shorts the S&P. So as the market goes down, as long as the market goes down, that one's going to be green. As you can see, it was up 1.91%. It's not an exact match of the S&P, but it's pretty close. The S&P was down 1.91. Ours was up 1.91. Now I did add that UVXY at 413. I added some more SH at 1808. So we're up a little bit on what we added, but I like how that is holding up. We haven't made a bunch of money, but we are in the green on it. And I like how it's holding up last week, so I did add to it. So that's counting on the market going down, not up. And that's kind of why we've got money in that. Most of our money's in these two things, and a good bit of it's in these two things. And this is the only cash I've really put to work. I did put a little bit here, but I lost it and got out real quick. But these two here is kind of like cash in my mind, because if the market goes down, we're in good shape on that. So I'm not worried about those. KO, Coca-Cola, down another 2%. I'm not real pleased with that. Tilray actually popped up on Friday, and it was another one of those Thursday that was doing real good, but they just sold off. Let me show you those charts. I think once those short things got all these shorts we're talking about, and some of these things sold off. Tilray, you can see Tilray had popped up on Thursday, and it sold off on Thursday. It popped up again Friday and sold off again. But the week, if you look at the week, it's pretty flat. Okay, so that's what you got to look at sometimes, the whole week instead of just a day or so. XSPA. Now this is the one I could kick myself on. This one here, on that same day I was playing around with AMC, wasn't focused on this one like I should have been. It shot up there really good, you can see here. And I did not sell, and we were up pretty good on that thing. That thing was up 30 or 40% at one time. And then I didn't sell, and I was too focused on my AMC thing I was playing around with. And so I missed opportunity there. Of course, it dropped again, and of course, it shot back up. But it's doing pretty good. I mean, for the week, it's still a little bit flat, but it had a little roller coaster ride there, and we could have got out of it right here. This is what we've been playing for, and I was not focused like I should have been. But that may come back. This one's been doing pretty good because this is the one that has the testing of the COVID stuff in the airports. And so I'm not too worried about it. I think we're going to get our money back on that one. We're not too far down on it now. But we were in the green really good right here. So we just missed an opportunity because of stupidity and greed. All right. But, sometimes you get out of focus, and that's just the way it goes. NKLA did really good Thursday, I think it was. Yeah, see how this one did too? This one was way up there, and then it got clobbered. Then it got clobbered towards the end of the day, and then Friday it was pretty much flat. But it did fall back a little Friday, and I bought some more of NKLA. We added to that. Now, we did make some money on that in our cash account just recently. But we're building a good position on that. That's a pretty large position that we have on this one right now. So we're not too far from the green on that one either. So I'm not too worried about that. I think that's going to work out fine. HTBX, that's another one of those COVID stocks. It is not really doing a lot. It's just kind of so-so. NVAX, Novavax, that's the one I played a lot last few years. Haven't been in it lately, but look at this. It had a fantastic day. Did have some great numbers come out on some P3 testing in Europe. I think it was 89%, 89.3% effective or something like that. I believe it was. Let's see if we can scroll in here and see that real quick. But it came out, the news, it was really something because it came out at 89%. And then let me see if I can see that on a chart here. You can't really see it on this chart. But what happened was when the news came out in after hours, it really shot down to that 117 level. And I guess because it was below the 90% that these other ones had been. And they even had one test that on the new variant that was even like 80% or something like that. But so the news was a little mixed up at first. I think folks got a little confused on it, but it got down to 116. Next thing I know, I look at it and it's going its way up, and it really took off. I mean, it did a good job. They had a good little day there. As you can see here, it shot all the way up to the high was 235.50. But that, I knew that would happen if the news was good. So, but just think the opposite reaction and worse if the news had not been good. But I didn't want to play around with it until it got back down to that 117, 114 level, which it did in after hours. But I just was not in a hurry to get back into it because I really didn't know how far it was going to go after it hit that 117 with that news. And the next thing I know, it was going up, and it was too late, as you can see here. But good for them, good for whoever's holding it still. I'm proud for you. 36 million shares traded. I think this is going to be a good one. I don't know how much higher it's going to go. Let's take a look at that 5-year chart. You can see it's past its 5-year highs. It just busted through that pretty good. Let's look at the max. So this max level here is 241. It hit that. No, it didn't hit 235. So these levels here, you're getting real close to the max levels it's been in a long time. I guess that's the maximum amount of data we got there. But don't know. I don't know if I'd touch that one for sure right now. But good for you if you still got it. XOM, ExxonMobil down 2.65. U.S. Steel, again, like I said, let's take a look at that chart real quick. It had a pretty good start to the day, and it pulled down before the day was over with. As you can see here, had a pretty good little start. Might should have sold right there. I think we could have made a little bit of money there, but I really was waiting for the 24. I'm waiting for the 24 level. I think that's where it was not too long. Okay, and ACB, let's take a look at that. take a look at that 5-day chart. You see, it was on a good upward trend there Friday, and then it pulled back a little bit towards the end of the day. But it's heading the right direction. It's doing good. We like that one where it's been going. Volume's very low. It's half volume, so but nice little trend to it this week. Did pull back on Friday, but a lot of things pulled back on Friday. The Dow was down 600 points, as you can see. S&P was down 1.93%, and Nasdaq down 2%. So we had a pretty rough day as far as the market goes on Friday. So not terrible there. Some things pull back. That's what happens. But that's our portfolio. Again, let's talk about what we did. Again, broke some rules, paid the price, refocus. Those are the things that you got to do sometimes. But we did it. We broke those rules, and we knew we were breaking the rules when we did it. There's another thing in my strategies. I say be flexible. So sometimes you're a little flexible with the rules that you live by when you're having a really good week. And so it cost us some of the money that we were up, but it didn't cost us any of our real money. So that's the way I look at it. So AMC 1450 is what we got in at. We sold at 10. NKLA we added at 23.43. UVXY is that VIX ETF. The VIX ETF, following the volatility. As long as this market's volatile like it is, that's going to go up. And so we bought into that a little bit. And then it's leveraged, so it's 1.5 times the futures of the VIX. So watch out for that. And we also bought more SH, which is the short of the S&P. Yeah, it's an ETF as well. So those are the ones that we added to. I like what we did, except for the AMC, and it really wasn't that terrible a move. I'd had opportunity to make money on that, but I didn't take my money when I should have. But that's what you do sometimes when you get greedy, and you pay for it, and I paid for it. So pretty straightforward. Okay, you don't win them all, and that's one I didn't win. Okay, all right. So as far as this week in the market, I'm expecting. Keep your eye on everything that's going on with this GameStop and the AMC and I think it's Bed Bath and Beyond. It's BlackBerry is one of them as well. It's a battle between David and Goliath. That's what it amounts to. People like me have actually beat the hedge fund guys this week. I mean, and so my applause for them. I love it. I love the fact that they did it. What I don't like is these brokerage firms stopping trading. I don't like the fact that you can only sell something versus buy something. That's terrible. Because that's just terrible. I mean, that's not a free market. And when they start doing stuff like that, I really, it really just destroys your trust in any of that. I mean, I've known Wall Street and the market's a crooked game. I've seen that over the years. The analysts are crooked. These hedge funds are crooked. The CEOs are crooked. It's all there's a lot of crookedness goes on there. There's nothing up and up about it. But you can make money at it if you know the game, and I know the game. In most cases, but I didn't know this part of the game. So this is something I've learned this week that, you have some issues behind the scenes with these brokerage firms, these clearing houses they work with and things like that. Go watch you some other YouTube videos if you want to dig deep into it. I've been watching them all weekend, and it's just a mess, really, what goes on behind the scenes and just the crookedness of it all. But let me say this, it's still the best place to put your money, unless you just want to, if you dig a hole and bury it in the backyard, you're not going to make any money, and you're losing money every day when you do that. If you put it in the bank, you're really losing money every day because you can beat it with the market. If you don't want to do stocks and things like that, if you'll just cost average into an index of some sort, that's probably going to be your best bet, especially if you don't like dealing with the ups and downs and the stuff like what happened last week, if it really bothers you, it's probably best that you buy indexes like the SPY and the QQQ and the DIA, those type of things, and buy them monthly or whatever you want to do to build up your portfolio if you don't want to fool with watching stocks and trying to pick stocks. That's the best bet. That's the best way to go. You're not, I mean, the market trend is up. Go look at the charts. It's always up. So, I mean, there's going to be ups and downs, but the trend is up. And it's more than what the bank pays in a CD. So if that's where your money's at over time, you're going to make more money there than you will anywhere. You don't have to trade. You can just do that and you'll do fine. But I like to trade. I like to do it. And I like to beat the market. And that's what my goal is, to beat all of the markets. And it's doable. It's doable if you do things right and not wrong like I did with AMC. Okay? All right, well, I hope you have a great week. We'll get back on here sometime in the middle of the week and talk about what's going on with our trades. But just keep an eye on the market. If it's going down in the S&P, we're making money with that SH. And if it's going up and down, we're probably making money with that UVXY. All right? And hey, got 2 subscribers to go till we hit 100. Don't forget to subscribe. Please do that if you haven't already. Click this button right here and subscribe, and we'll get up to that 100 mark. I think I can change my URLs for my videos to a actual URL of some sort. If we hit 100, I'll check into that once we get above it and stay above it. All right? Well, thanks. Have a great day. Again, don't forget to